This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Well, good day everyone, it's Liam Garman here, Managing Editor of Real Estate at Momentum Media, the team that brings you the Smart Property Investment Show. And today I'm joined by an expert in the Brisbane market who's going to take me through all the minutiae, everything that you need to know about Southeast Queensland before you invest. And I'm talking about an industry leader, the one, the only Melinda Jennison, Managing Director of Streamline Property Buyers and President of REBAA. Welcome to the podcast, Melinda.
Thank you so much for having me. It's a pleasure to be here, and I look forward to sharing everything that I know, and I'm happy to share about Brisbane.
No, fantastic. And thank you so much for joining me, because I know how busy you are. I know your calendar is just packed out because you've got so many people coming to you that are interested in exploring the Brisbane market. So starting right from the beginning, I think it's quite of an interesting springboard to understand, in your perspective, from investors that you're speaking to, why are buyers looking to expand into the Brisbane market in particular?
I don't think it's any surprise whatsoever. I think the runway in the lead up to the 2032 Olympic Games is definitely something that's on many people's minds. And it's not just an event that's going to change the shape of our city. Of course, right now, when we compare Brisbane to many other capitals around Australia, Brisbane has one of the strongest local economies. There's such good employment prospects throughout Southeast Queensland as a whole. So there's a lot of jobs and there's a lot of opportunity that presents off the back of that. And there's this huge amount of spending happening right now on infrastructure, and that is actually driving this development and this economic activity throughout the entire southeast corner. So there's three levels of governments that are contributing funds towards infrastructure development. This infrastructure will be legacy infrastructure, so it's going to change transport systems around the city, lifestyle precincts, etc. So there's a lot of benefit to the local economy because of that. I will also say that Brisbane as a capital city market actually has higher yields than many other capital city markets around Australia, especially the East Coast capital cities. But one other thing, according to the CoreLogic data right now, Brisbane does have the second highest median value behind Sydney. So Melbourne is actually less expensive when you look at median values for both houses and units. However, some more recent data that's come out by PropTrack actually confirms that when we look at property on a square metre basis, so we compare houses that sell here in Brisbane on a square metre basis and houses that sell in other capital cities on a square metre basis, you actually get more bang for your buck here in Brisbane, in that the median value on a square metre basis is actually lower than that in Melbourne. So if we want to talk about affordability, you actually get more house or more land for the same price here in Brisbane. So for that reason, I think many people have been attracted to the Brisbane market because it's still relatively affordable when you look at it on that different level.
So that's quite interesting, all the data you brought up, because it seems quite economically rational that you've got this 7-8 year infrastructure pipeline. We know that Australia is in the middle of a skills shortage. So presumably when you're building, say, stadiums and large-scale accommodation for all the athletes coming ahead of the 2032 Olympic Games, that you would be bidding for skilled tradespeople from right across Australia, because we're in the middle of a skills shortage. You're going to be competing with the resources industry. You're going to be competing with shipbuilding. You're going to be competing with infrastructure building, even in other major capitals. So to tempt skilled tradespeople up into Brisbane, you're going to have to offer them quite decent wages, which in turn will lead to better yields. And you're going to have that level of internal migration as people come over. It seems if you're a risk-averse investor and you're worried about investment cycles, the Brisbane market seemingly is quite a safe investment. Now, I might regret my words with that, but is that a reasonable assessment?
Look, I don't disagree with that assessment. What you've highlighted there is a really relevant point. There is so many trades that are going into these big infrastructure projects. Some of the big builders are pulling all of those trades off smaller jobs. And what that means is that building approvals in the residential space have actually fallen backward. And at a time where demand is escalated or heightened, it's actually further contributing to the housing crisis throughout Southeast Queensland as a whole. There's a huge gap right now between demand. That's the number of people that are in the market to buy, and also the demand for rental properties, the number of tenants looking to rent, and the supply of the housing that's available. So supply can be measured in a couple of ways. We can look at the number of properties that are currently listed for sale. In Brisbane right now, we are still between 25 and 30% below our 5-year average when it comes to the total number of properties available for sale. Now, that's quite different to the likes of Sydney and Melbourne, which are back at or above those long-term trends. So we still have
in terms of properties coming on the market?
That is correct, yes.
Wow, that's a really interesting statistic.
Total volume of properties available is lower here in Brisbane, and that's actually the same trend across Adelaide and Perth. And it's one of the reasons why these three markets have actually outperformed in the last 12 months. But at the same time, as you also rightly pointed out, we actually have this situation where the population continues to surge. So up until just recently, we were hitting our record rates of interstate migration. Now, we know off the back of COVID, we had a lot of people migrating from southern states up to sunny Queensland, looking for more space, that backyard, that larger house that we talked about previously. But we also had really strong rates of international migration into the southeast corner. And this all puts pressure on housing. And it's part of the reason why there's this continued demand for housing in Brisbane at the same time as this low supply, both in current supply, that's in listing volumes, but also long-term supply because building approvals are also trending downward.
It's funny that you should say that in terms of the interstate migration, because I think during the COVID lockdowns, a few friends and I were sharing a beverage legally, probably. And we all agreed that when the borders opened back up, that we were all going to move to Brisbane. And it seems like a lot of people actually following through with it. Unfortunately, I was too attracted to the harbour city and I never followed through with our pact. But are there any areas from what you're seeing in the Brisbane market that are potentially performing anomalously well?
It's a great question to ask, and I'm actually going to start with different product types because when we look at the performance of Brisbane over the last couple of years, we've had superior performance in attached dwellings. So that's that unit and townhouse space. It has outperformed the market. It's basically been a superior performer compared to that detached dwelling space, that's single houses. So that's quite unusual when we look at the long-term averages. So if I was just to give you an example of the last 12 months here in Brisbane, for example, houses have increased 10.2% over the year and units and townhouses have increased 16.2%. So that's quite a difference in performance. A lot of that is driven by affordability because obviously we've seen interest rates increase, the cost of living increase, inflation's been quite high. Anything under $700,000 as a price point has been particularly popular, especially in the last 6 months because the state government changed stamp duty thresholds here in Queensland to enable purchasers to get stamp duty concessions up to that $700,000 price point. So these things actually shift demand into different product types and different locations around the city, and they're the areas that we've actually seen demand increase.
So tell me, those $700,000 stamp duty concessions, are those for all properties under $700,000?
First home buyers, that's right, for all properties, correct.
Yeah, so obviously that makes a lot of sense because you would have a lot of first home buyers or even rent investors that would be herding into assets that are below 700,000. That makes a lot of sense. In terms of geography, is it an even slate right across Brisbane or southeast Queensland? Are there any areas that are doing less well potentially that we would expect more investors to be interested in?
Obviously, the more affordable end of the market, which typically...
I know, I threw you a curveball there. I apologise.
That's okay, because when we're looking at which areas are performing well, it does depend on the subset of the property type, because the inner city unit and townhouse market has been an outperformer simply because the demand has shifted to that location, but also the more affordable houses on the outer rings have performed particularly well. I guess the thing that's really important for investors to understand is that all areas in Brisbane have a different demographic. Brisbane's not one property market. And whilst we may have seen some movement in certain segments of the market, we are in a higher interest rate environment right now. So therefore, as we look forward, we've got to consider affordability at a local level, because capital growth in terms of price growth can only occur if we can continue to see affordable properties for people that live in that location.
Yeah.
Quite in the same way, properties need to be affordable for people to rent in a particular location as well. So rental price growth is also capped by the amount that a particular demographic group may be able to pay. So I would urge investors to really understand the local demographic of the area that they're buying into to ensure that they've got a low risk asset that's continually going to have that upside opportunity for both rental price growth and capital growth into the long term.
Do that research into the areas they're looking to buy into, or partner with someone in the know like yourself, Melinda, who can walk you through the ins and outs of the Brisbane market as a buyer's agent. Now, we're going to go to a quick break, and when we're back, we're going to be looking at potential challenges facing investors in the Brisbane market. We'll be back in just a second. It's Liam Garman here, managing editor at Momentum Media, the team that brings you the Smart Property Investment Show. And I'm joined by the one and only, the indefatigable Melinda Jennison, managing director of Streamline Property Buyers. And Melinda, we focus a lot on the positives behind the Brisbane market, the reasons why, given 7-8 years of infrastructure pipelines, might be a safe choice for investors, why buyers are going there, asset classes that are performing particularly well. Now, as an outside investor, I've always looked at Brisbane potentially, and I could be wrong with this, with maybe a pinch of salt, given things that we see in the news quite a lot, say things like floods. So considering that and those anomalies, are there any challenges facing investors in the Brisbane market that they should be aware of before they make any decisions?
Look, there absolutely are. Flood is it's something that anyone buying in Brisbane must be aware of. There's many buyers that are prepared to take the risk and buy in a flood impacted area. But of course, insurance costs can be actually really prohibitive. Any property you can actually take out insurance. Insurers are required to provide cover, but it's the cost of that cover that just becomes unsustainable. And that's why many of those properties don't have insurance. But I would say more so than that, a lot of investors are quite savvy now. We know how to read flood maps. Certainly anyone partnering with us would be identifying that as a risk that we wouldn't be recommending investors take. New rental legislation is probably the biggest challenge that faces a lot of property investors that are coming into Brisbane. Obviously, rental legislation is state-based legislation, so people from other states may not be familiar with what is actually happening here. So recently, we've had new minimum housing standards come into play where properties must meet a certain requirement, and many existing property investors have had to spend money on properties to ensure that they meet those minimum standards. But more importantly, for new investors getting into the market, it's absolutely critical to have an understanding of what you're buying so that you're not going to get hit with huge maintenance costs up front before you actually find a tenant. So I'd say that's one of the biggest challenges. The other thing is, and this is very new legislation from the 1st of September, we now have a situation where rental price increases in Queensland are attached to the dwelling itself and not to the tenancy. So what this means, and this is very important for interstate investors, if you're buying a property, for example, that's had a 6-month tenancy agreement in place and you purchase that property and you add value or manufacture equity, you might do a renovation, update the kitchen, bathroom, repaint, new flooring. If you rent that property out, you can't actually charge a higher rent than what the original rent was if it was rented within that 12-month period. Critical piece of information, because I think a lot of investors are purchasing properties based on what the rent should be, not what it can be based on current legislation. So our REIQ standard contracts, when you purchase a property, now have the ability to ensure that any previous rental amounts are listed if it has been listed for rent in the last 12 months. But again, a lot of sales agents, especially here in Brisbane, are not yet actually populating that information. So it is up to the buyer's agent or the buyer themselves to actually understand the questions they need to ask to understand if this is something that actually affects them.
Now, that was awesome. Thank you so much for that. Now, I just opened up so many questions, and I'm sorry, because I'm going to go right back to the beginning of what we were talking about. So my first question is, so you mentioned insurance costs. Mm-hmm. Now, if you are in a flood area or an area which might be prone to some flooding but might not be completely at risk, so rumors that houses are uninsurable, that's not correct. All houses can be insured. It's just your premium goes up.
That is 100% correct. Yes. So insurers are required to extend cover. The problem is that a $20,000 premium is obviously not something that is sustainable. So most of the landlords would choose not to actually take out that cover. And it is the same for homeowners. The insurance, it's possible to obtain the insurance. It's just that it's prohibitive in terms of the cost.
Of course, and it just becomes it becomes costly, and there is just no economic benefit to it. Now, the second point is that you brought up was that you can get a hold of a flood map, and if you're a savvy investor, if you're an investor that researches their assets, you would have a look at that. How do they go about getting this flood map?
It's a great question. And actually, there's 3 different layers of flood mapping or flood resources that we would encourage people to look at here in Brisbane. So each city council region will have its own flood mapping. So I'm going to talk specifically about the Brisbane City Council region for the purposes of today. So the Brisbane City Council has access to what's called a flood awareness map, and that can just be Googled, flood awareness map Brisbane. A property address can be entered into, and that's going to give you an indication as to whether that property sits in or near an overland flow path, a creek and waterway flooding path, and or a river flooding map zone. So if that is the case, it will show that it's likely, unlikely, or highly likely that that property will be flooded. There are also additional maps available on the city plan site, which enables you to search through a number of different overlays that may impact a particular site. That's a little bit more difficult to navigate, but that's through PD Online, Brisbane. And the third option is going to provide a much more comprehensive report, and it's called a flood-wise report. That's going to give levels of the ground across a particular site, which will include the contours, and it's going to help you understand any previous flood impact on that specific site and the depth or the level of that previous flood impact. That's very useful for developers and people that are looking to actually build on a site, because now you must meet minimum habitable floor levels when you're actually constructing new properties in flood-prone locations. So many different ways to assess flood impact, but it is important to note that sometimes one mapping system might show no impact and another mapping system might show some impact. So I would urge buyers to actually be as thorough as possible with their flood due diligence to ensure that that's actually ticked off and you have confidence that you're not going to be impacted. One more tip is I always urge buyers to actually get an insurance quote if you are nearby a flood mapping area, because again, just because you're outside of the flood maps doesn't guarantee you that your insurance is going to be lower. It's really important to get an understanding of what that insurance risk is likely to be as well.
Now, to our listeners, to our regular listeners at the Smart Property Investment Show, you now have no excuse to not do your research into flood-affected areas in Brisbane, because that was an amazing answer, Melinda. And I don't actually know how you knew that all off the top of your head. It goes to show that you know the Brisbane market back to front. And my final question of that kind of series, you mentioned new minimum standards for rental properties in the Brisbane market. Tangibly, what would they look like?
Yeah, so things like every property, every window needs to be lockable. So we have a lot of casement windows here in Brisbane. If they don't have locks and if they're actually on ground level, they need to actually have key locked access. There cannot be any mold in properties. There cannot be any water penetration. Doors need to be deadbolt. So these are all of the things that investors need to understand. Additionally, privacy has become a critical component of the new tenancy laws. With minimum housing standards, all habitable spaces must come with operable curtains or blinds. When I say operable, just because a property has some vertical blinds, for example, if you can't open and close them and the functionality is working, you will need to replace them. So it's important for people when inspecting properties to get an understanding of what may need replacing to ensure that those minimum housing standards are complied with. And of course, partnering with professional buyers agents, this is the sort of information they should be sharing with clients, because it helps clients understand additional costs post-purchase, and that really does impact cash flow. So it's important that people are aware of that.
So that's very interesting, especially the key lock for Windows, because that would never have crossed my mind at all. It's one of those very niche things that, and it makes sense obviously from a security aspect, but it's not something that if I was viewing an investment property in Brisbane that I would actually have thought of.
No, most people don't. And I think that's where, people can get some surprises when they then go to actually rent the property and the property manager says you'll need to actually install these locks. Just to clarify, it doesn't need to be key locks as such, but it does need to be something that's internally lockable. So sometimes you'll actually have some barrel bolt type locks, and that would be acceptable as well.
Yeah, no, fantastic. And those are great insights. Now, looking more broadly, do you have any advice for investors who are looking to explore the Brisbane market?
Look, I think I touched on it previously. Brisbane's not one property market. We've seen extraordinary growth off the back of COVID here in Brisbane as a whole. And looking forward, we absolutely do not expect that growth will be uniform across all regions in the next 5 to 10 years. Affordability is definitely going to be a big issue for many areas. We are seeing a lot of areas being propped up by interstate investment right now. Locals are completely priced out. We're seeing the ratio of owner-occupiers to investors start to shift, which brings risk into a particular area. And we're seeing many areas being capped in terms of affordability from a rental perspective. So depending on an investor's risk appetite, I think it's absolutely critical to understand where you're buying, the demographic group that live in that particular location, and what that's likely to look like from an investment perspective on a long-term hold. I would also say that Brisbane's quite different to Sydney and Melbourne in that we traditionally have been an area of lower density. We don't have as many high density unit complexes. We don't have as many sort of row houses, or we call them townhouses here in Brisbane. And yet we still have a lot of land that is zoned for this higher density development. Now, we also read documentation that the Queensland government put out. There is documentation called the Southeast Queensland Regional Plan. It populates and predicts where future supply pockets are coming. That is where the state government is earmarked land for higher density dwellings in the future. One thing that Brisbane has, which is a little unique, is that a lot of the inner city locations, what we call our blue chip locations, have a lot of character protection. You can't demolish a lot of those homes. So there's limited future supply in some pockets of Brisbane, but in other pockets of Brisbane, there's actually a lot of future supply coming. So investors need to be aware of that, because price pressure or price growth actually comes from a situation where you have low supply and high demand. So if you see a lot of new supply coming into a market, that can absolutely impact on your rental returns, but also on your capital growth. So be aware of future pockets of supply across the city.
No, that's fantastic. Don't just herd in for the sake of herding in because you see everyone else do it. We're going to go to a quick break, and then when we're back, we're going to be looking at the new era of buyer's agents. We're going to be back in just a second. Welcome back. Liam Garman here, Managing Editor of Real Estate at Momentum Media, the team that brings you the Smart Property Investment Show. And I'm joined by Melinda Jennison, Managing Director of Streamline Property Buyers. Now, Melinda, thank you so much for your amazing insights into the Brisbane market. And I know I've been jotting down, I've now gone through 3 pages of notes from everything you've been saying. It's been fantastic to hear your insights. Now, I'm going to change the topic a little bit, something that might be a little bit controversial for some listeners. And that's the new era of buyers agents coming through, the new kids on the block in the profession. Do you believe that people that are now coming through might have the wrong motivation for helping people on their journey, or potentially pose a risk to people's investment journeys?
Look, that's a loaded question.
That is
and
a
I'll
loaded
answer
question.
As best as I can. I am the president of the Real Estate Buyers Agents Association of Australia. Our association exists to raise standards across our industry. So I am a huge industry advocate for best practice and ensuring that people who are representing clients in the buyers advocacy space are doing what is always best for the client. Now, on top of my work with REBAA, I have also, in conjunction with a fellow buyers agent here in Queensland, developed a training program in conjunction with the Real Estate Institute of Queensland to train buyers agents here in Queensland. We've delivered that program, and some of the feedback that we get is that there are some programs that are available, commercial programs that teach people to be buyers agents. However, a lot of the on the skills learning or state-based legislation is not covered in those programs. And because of that, we have an industry that has an element of risk. Obviously, if you're working with a buyer's agent that is not adequately insured or not adequately licensed, that can pose enormous risk. Every state has its own legislation in terms of what is required to become a buyer's agent. There are some states that require a minimum of 2 years operating under a principal licensee in order to become qualified. However, as an industry body, we are very aware that there's a lot of people circumnavigating those requirements. One of the loopholes is that they will come to Queensland to obtain a license, and then they will, by mutual recognition, be able to operate in their home state. Now, obviously, training in Queensland with Queensland legislation and then going back to operate in other states such as New South Wales and Victoria doesn't actually enable them to adequately represent clients understanding the legislation in those states. So I urge buyers to be cautious. I urge buyers to do their due diligence on the buyer's agent that they would be associated with. Members of REBAA are adequately licensed and meet minimum standards in terms of what we actually require a buyer's agent to do when representing a client. So look for experience. And for property investors, I would also highly recommend visiting the PIPA website, Property Investment Professionals of Australia, because you can search for those buyer's agents that are also qualified property investment advisors. And that's going to give consumers a further level of confidence to know that the person that they have selected or the business that they've selected actually knows what they're talking about. They've got experience and they've got runs on the board. I think that the network that the buyer's agent has is invaluable. And again, a lot of newer buyer's agents may be buying cross-border. They may not be on the ground. They may not be local, so they don't have that same network. And of course, one of the advantages of partnering with a buyer's agent is the ability for that buyer's agent to represent you on the ground and tap into networks that you won't have access to yourself. So I think that's a very long-winded answer to your question. I think there's a lot of issues that we have with our industry simply because it is in a very fast growth phase. And I encourage more buyer's agents to enter the industry as long as they are receiving adequate training and that they are upskilling and that therefore they are providing the service that is not going to dilute the professional reputation that many of us have within the industry.
Now, it seems that's a very common bit of feedback that I get from buyers agents is that training aspect, like you said, the need for more training to make sure that buyers agents right across Australia are delivering for their clients. And in that training aspect, yeah, I'm hearing it all the time that there's an expectation with new buyers agents. And I think that might be unfair. Not all new buyers agents are in the same boat. Perhaps it's buyers agents that are coming in expecting that you can be a buyer's agent as a part-time job. That seems to be a common complaint, that you're doing it as a part-time job outside of a day-to-day, where you are therefore not necessarily delivering for your clients. You're not providing that level of analysis, that level of detail that your clients would expect. Is that something that your new guidelines are working on?
I think that that's an enormous problem within our industry. I'll give you a couple of examples. So here in Brisbane, our market has been extremely competitive, still is very competitive for some product types. And what that means is that there's more buyers than sellers. We might find a property, it might be suitable for our client, and there's going to be multiple offers on that property. Now, a sales agent might dictate to us that the offers are closing on this day at this time. If I had a full-time job and I was therefore unable to service my client and provide final instructions to them to assist them with formulating an offer in a competitive market, I wouldn't actually be representing them to the best of my ability. So that's just one example where I feel working as a buyer's agent as a side hustle is a flawed concept. I feel that if you're partnering with someone, that should be their sole profession. They should be representing you on a full-time basis and generally be available to you to assist regardless of what the agent's sale process is. And that sometimes for buyer's agents includes Sunday work, Saturday work, of course, non-negotiable in real estate, but many nights and certainly many days as well. So we call it work-life integration, not work-life balance. We are available around the clock to clients as it is required during negotiation times, but generally, yeah, it's something that I would find very difficult to do part-time.
So, Melinda, I appreciate you using the word side hustle because I was doing everything I could to try and jump around using side hustle because I didn't know, is it too direct? Is it going to put people off? But side hustle is what I was trying to jump around and say. So I'm very glad you said that. And, having worked with buyers agents in the past and having interviewed many, many, many of them and spoken to many, many of them, there is that expectation, exactly like you said, that when something's closing or you've got a contract that you need to submit, you need to do it then and there. There is not necessarily an hour to spare. There might not even be 10 minutes to spare. The expectation that you could do everything after 5 o'clock or 5:30 as a side hustle is completely flawed.
It certainly is. And I think that's where, as an industry, we need to ensure that when buyers are selecting a buyer's agent to partner with, that they can expect that minimum level of service so that our industry and the reputation that we have as an industry is not diluted to a level that, it's just something that people are doing on a part-time basis.
Absolutely. Now, what's next on the journey? What's next on the to-do list for REBAA?
REBAA's got some fantastic growth targets, I guess you could say. We've got a lot of quality buyer's agents actually joining our association as we speak. We offer an annual conference for all buyer's agents, which is the only national conference specifically aimed at upskilling buyer's agents from a professional body. We've also got bi-monthly webinars to enable our members to upskill. They are conducted by external consultants as well as many of our members. We've got some of the most experienced buyer's agents from across the country that are members within REBAA. So we're very proud of the reputation that many of our members uphold within the industry. And we're really, excited about the future of REBAA and the brand in representing quality buyer's agents across the country.
Oh, that sounds fantastic. And seems like there's going to be big 12 months ahead for you, Melinda.
Yeah, certainly. And, here in Brisbane with our own business at Streamline Property Buyers, things have not slowed down. We've got, a lot of exciting plans for the next 12 months ourselves. And look, buyers in Brisbane just haven't slowed down as well. I think in Queensland, 40% of all loan commitments are coming from property investors. So there's a lot of interest in 40%. Queensland. There's a lot of interest in Southeast Queensland, and Brisbane is definitely one of the locations for many investors as well. So, exciting times ahead.
Well, I think after that podcast, I think all of our listeners are going to have a far better understanding of the Brisbane market, the highs and lows, the potential risks, and also the benefits of it. Melinda, I think that is all we have time for today. Thank you so much for joining us on the podcast.
I really appreciate it. Thank you so much for your time.
No, thank you. And thank you for all your insights. That was Melinda Jennison, Managing Director of Streamline Property Buyers and President of REBAA. And that is all we have time for today on the Smart Property Investment Show. And we'll be back in just 2 days with another episode. But until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Feeling trapped by rising interest payments? Escape from mortgage prison with expert refinancing assistance from Finny. We have helped hundreds of borrowers break free from higher loan repayments by finding a more suitable loan. Our expert team can quickly assess your situation, and if there's a better lender available, we'll find it fast. Don't delay. Call today. Speak to a Finny mortgage specialist on 02 8866 2444 or visit our website at www.finny.com.au.